Hello and welcome to this very special edition of Commodity Trades. I'm Prannoy Banerjee. In a surprise move, the US President Donald Trump ordered a massive military strike against Syria, following which the US military launched 59 cruise missiles at a Syrian military airfield. This is the first direct American assault on the government of President Bashar al-Assad since the country's civil war began 6 years ago. Here's President Trump addressing the nation just ahead of those airstrikes.
I ordered a targeted military strike on the airfield in Syria from where the chemical attack was launched. It is in this vital national security interest of the United States to prevent and deter the spread and use of deadly chemical weapons. There can be no dispute that Syria used banned chemical weapons, violated its obligations under the Chemical Weapons Convention, and ignored the urging of the UN Security Council. Years of previous attempts at changing Assad's behavior have all failed, and failed very dramatically. As a result, the refugee crisis continues to deepen, and the region continues to destabilize, threatening the United States and its allies.
All right, so that's the key geopolitical risk that has re-emerged in Asia that we are looking at. We have a very special lineup of guests for you today. Joining us on the show from Sydney is Jonathan Barrett, he's CEO of Celsius Pro. And from Bombay, we have Prathamesh Mallya, he's Chief Analyst, Non-Agri Commodities and Currencies at Angel Broking. We have Navneet Damani, who's Associate Vice President and Head of Research at Motilal Oswal, and also Aurobindo Gayan, who's Head of Research at Kotak Commodities. Let me come to you first, Navneet. Let's start with the initial spike that we saw as far as crude is concerned, and also in terms of precious metals for gold. But let's start with your baseline view on Brent, and then we can go to other commodities as well.
Well, talking about what has happened in Syria, obviously geopolitical tensions continue to drive crude oil prices and gold prices globally, and this is no other event which is supporting the prices. Talking about fundamental developments, we've seen that inventory has been continuously on a rise, but floating offshore wells where we can store crude oils has been declining, and that is the reason this escalation in prices has been continuing over the last few sessions. And nevertheless, this supporting factor is also likely to drive up prices about 3 to 5% higher. Couple of percent has already been factored in, and I guess that another 3 to 5% could be in store over the next couple of sessions. So
what would your near-term, a week-long target, say, for instance, be?
So talking about WTI particularly, we can see it soaring up to 53.5 and probably 55 also eventually.
All right. Prathamesh, come in on this, and let's stick to crude for a bit, because we've seen both Brent as well as WTI soar on a week-on-week basis as well. We've seen Brent, which is closer to now $55 per barrel levels. Do you think there is further upside? Because even after the wind down from that $58 per barrel level that we saw, the longs were still at record highs. So does that give you some assurance of a near-term rally even beyond these levels?
We see it is better to go with the trend rather than going against the trend, and the event has clearly signified that crude price will rally further. Another couple of dollars or $3 cannot be ruled out. However, what is important is on the other side of the story, we have crude inventories very high, almost at the high point in the history of United States. That is something which really needs a close watch. So a note of caution: if you want to trade in oil, be on the long side. Yes, it may correct soon, depending on how inventories fare further in the coming weeks.
All right, let's go across to Jonathan Barrett as well. Jonathan, always a pleasure to have you on the show. Your first reactions on the kind of up move that we've seen, and do you at all think that it is sustainable? And if you can also put this in conjunction with the fact that we've seen some kind of confusing data come out of the EIA this week, because it has been contrary to estimates. Crude dropped from that intraday high that we saw, but over the longer run, do you see a net drawdowns happening as far as API and EIA data is concerned?
Yes, look, good morning. I think at the end of the day, when we've seen this spike, a lot of people have rushed to the market, I guess due to the concerns that this we have issues in the Middle East starting again. Obviously, Trump's action there has caused a little bit of disharmony in the region. So as a result of that, we're seeing pressure to the top side. It is interesting to read through the IEA data where they're actually starting to suggest that this glut could come to a close and that in the next 6 months we could actually be trading at a deficit of oil of about 600,000 barrels. So when I start to look at that and the issues starting to evolve in the Middle East on the Syrian front and the US, then I think that we can see a test of oil to the top side of the range. And remember, it's been in this range for quite some time. So WTI 55 on the top side, Brent 56 is where we are. I actually think we can test those extended highs, and if it breaks there, then it's a whole new game from there. Breaks 58 on the top side for Brent, 58 on WTI, 60 on Brent, and then it's a whole game changer.
All right. Jonathan, it's interesting you give these near-term targets, and I'm assuming these are near-term targets, 60 for Brent and 58 for WTI on the upside. I want to ask you, what can puncture this positivity? Is it the fact that there are shale rigs coming back on stream in a big way? Because we had probably 250 or 300 of them, and that was a record low in the last year. We've seen a huge revival now. Last week, and correct me if I'm wrong, the number was close to 662. It's more about profitability of individual rigs and individual oil companies. But do you see the incremental amount of rigs coming on stream plateauing out from here on and thereby not puncturing this bullishness on upside?
Well, look, I think it's an argument that we've all discussed in terms of the glut and the Baker Hughes rig count sort of up about 50% on last year, which is a phenomenal amount of oil that's coming onto the market. But I also think we have to look at what's happening in OPEC and the fact that Saudi Arabia and Russia are still producing record amounts a day, daily record amounts. So they're continuing to pump record amounts, although they've still got cuts. Just imagine if they didn't have these cuts and they continued. And I think that tells us that the general consumption of oil is generally picking up around the world. So as a result of that, we could see these price targets to the top side realised sooner rather than later.
Right. Jonathan, in terms of the risk from Syria in and as of itself, I mean, it's not a big producer in the East Mediterranean, but it borders the second biggest producer, that's Iraq. Yes. So what kind of disruptions or risk to adherence of the near-term commitment that was undertaken in November do you see in terms of a continuation of the agreement?
Yeah, look, I generally think when you look at it's a destabilisation of the region, which the market's concerned about. And I also think that Syria is not that far away from the Straits of Hormuz, where we actually see 40% of seaborne oil actually go through. So once again, it highlights the importance of this area. And I think that if it continues to escalate, with the US involvement in that, then people are generally going to get concerned that anything could happen. And also you have to think that Syria is very close to Russia in this. So the market's going to be focused on the next level as to see who's going to get involved and why they're getting involved. And that in itself could escalate. And I think that's where the market sees risk at the moment.
Right. We've got a whole host of domestic guests with us as well. So Aurobindo, let's come to you. Your first reactions. Let's start with crude, and probably if you can give us near term a week-long target for Brent and WTI as you see it.
Yeah, well, actually, we have seen a good amount of sideways movement in the crude oil prices of late for the last one and a half months, and we are seeing a new trigger coming in this morning and rising crude oil by more than 2% and above $52.50 for NYMEX WTI crude oil. I think the current momentum shall be continued for a while, and as far as supply side concern goes, I think the supply disruption may not be so much affected, being the smallest country that it produced crude oil in Syria, but then I think crude oil prices on a sentimental tone, we have seen prices rising, and the current momentum could be continued, and we could see prices going towards $54 in the near term for the WTI crude oil. And if I talk about the Brent oil, I think we might see $58 to $60, and the spread between the WTI and Brent, which has been between $3 to $3.5, may continue to remain in the same spread, but then upside potential for both the commodities is likely. And from the domestic perspective, we need to be thankful that the rupee has been appreciating so strongly. Hence, the price rise in the crude oil prices in the Indian market has been curtailed. Otherwise, we would have seen crude oil prices rising above 3,500 rupees per barrel. And we believe eventually with the rise in crude oil prices at the WTI Brent will also have an impact on the Indian crude oil prices. And we expect crude oil prices in the Indian market to trade in the range of 3330 on the lower side to 3470, 3480 on the higher side. And for the recommendation goes, I think we recommend buying from the lower level.
All right.
Yeah.
Jonathan, let's come to you very quickly, and then we'll move to other asset classes as well. Can you give us some idea of the kind of supply and procurement as it is happening? Because what's the trend from West Asia as well as North Africa? Are there greater supplies that are going on for Asia right now in terms of Asian refineries and Asian refinery demand, and also hedging, which is boosting trading volumes? And do you see a greater amount of concentration still focused on the long side as far as WTI as well as Brent trades go? Will you be able to give an insight on that?
Well, I generally think when you look at the volumes, and I think we also have to think that the market has been in this range for some time. So there's a lot of hedge at the top side, but at the end of the day, the market in my mind seems to be relatively well balanced because it hasn't moved out of this range, and we've seen so many geopolitical issues and events starting to occur or have been occur, and I think at the end of the day, I think the Asian economies generally want to see a stable price for energy, and that's what we're seeing. So the outcome when we have a bifurcation point in the market, the bulls and the bears are meeting, and that's a positive outcome so that people can get used to good priced energy, well priced energy, where people aren't seeing it too high or people aren't seeing it too low. But at the end of the day, we're seeing an uptick in consumption. As long as that supply meets it, which it currently is, then I see it's a positive outcome for the global economy.
Right. Let's also speak about gold, because that's also one asset class that immediately spiked up post this news coming in. And obviously in India, we love to speak about gold and also in terms of accumulation physically as well. Jonathan, what's your near-term target? I mean, we've seen gold rise from $1145 an ounce to now almost at $1260 and thereabouts. Should it sustain going ahead from here?
Well, look, I think the interesting thing was last night's move, where normally gold, particularly over the last month's worth of trading, has been a proxy for the US dollar. Now, the US dollar last night came under pressure a little bit, but then bounced back. So it really didn't do too much, but we did see gold start to trade higher. Now, this is starting to suggest that gold in itself was trading through its own means, not as a proxy to the dollar. Now, also from those technically minded out there, breaking through that 1255 or even 1260 signals new entry into long positions. So when we see this sustained break today, which we've just seen, then you'll see a lot of fund activity start to come to the market, because that signifies a breakout for gold. So in my mind, it's looking quite positive if we can get through a couple of trading sessions above 1260.
Right. Navneet, would you agree on the positive view on gold? What would your near-term targets be?
Well, I would absolutely agree on what is told about gold. Gold has been hovering between about $1,210 and $1,260, $70 over the last month or so. 1260, 1270 has been a strong resistance, probably on the upside. A couple of events have been lined up with Donald Trump meeting President Xi today, and probably this event which is coming today also would surprise the market. So if a clear break about $1,270 would take the prices further up to about 1,315, 1,325 in the short to medium term.
Right. Aurobindo, near-term targets on gold, and do you think that this is a good time to enter, or would you wait by for a correction, if at all, the asset class would be generous enough to give you one?
Well, actually, we have seen a good amount of rally in the gold prices, as we just mentioned that it has moved from $1,200 and now to $1,265, and a few triggers that has actually supported gold price to move up, and hopefully this current momentum might move the gold price to $1,280. But then I would be little critical about buying the gold from the current price. Rather, would wait for the price correction to get into a long position in that. And since a few events are lined up, I think we should see a good amount of volatility. In fact, some sort of profit booking should be also there, and buying the gold back around $1,250 at the international market would be a good suggested strategy. And we could see prices breaking $1,280 again, and then possibly it can hit $1,300. And on the lower side, we should see $1,230, $1,225 as a very strong support. However, if we talk about the Indian gold prices, I think 29,000 has been a mark that we have been seeing for a couple of months now. And because of rupee appreciation, the rise could not be seen so much. But then once the international gold price starts moving up, we could see Indian gold prices moving towards 29,400. So broadly, I would say to buy gold around 28,600, 28,500 levels for a target of 29,300 to 400 levels. So precisely, we're expecting 800 to 900 rupees movement maybe in the short to medium term in gold view is concerned.
Right. Prathamesh, on gold, and if you can also add your view on silver, do you think that there's greater scope that we could see on silver in comparison to gold, if you could give MCX targets?
In terms of MCX silver, we're expecting a further 1,000 rupees move, or possibly around 42,600 or 42,800 can be expected soon, and it would move in coherence with gold, since we are also agreeing that buying gold on dips is an advisable strategy. 1,300 in the international markets looks to be very fast as soon as possible, and even the Indian markets, 29,000 and 29,200 is the immediate targets for gold.
All right, let's speak about the broader metals, the base metals complex as well. Jonathan, in terms of copper, and if you can give a global view also on this, we've heard a lot about supply disruptions in larger global mines, be it the BHP Billiton mine or even Freeport as far as Indonesia goes. But at the same time, there has been some kind of inventory build-up for LME as well as Shanghai. So, the forces are working in disjunction with each other. Do you think that over the long term, specifically for copper, once this mine output starts to come through, it's only likely to head south in the medium term, is what the time horizon is?
Yeah, well, I think what we understand generally, I guess, is when you do have those issues at some of the world's largest mines, then that's only a temporary disruption. Eventually, they do get solved, or strikes get solved. People go back to work, and then we get that supply. It has been very interesting to see that the price action, even though we've had those strikes, and we've also seen builds. So that does send a very mixed message in my mind on the consumption side to say, well, look, we're not consuming as much as we should. And when we look at copper as the litmus test, for the strength of the global economy, it sort of suggests it's a little bit of a concern, seeing that we really should see those prices start to move on. And let's see, once we certainly move into the warmer periods of the year when we generally see more of a pickup, whether those inventory builds are just seasonal. So quite interesting to see, where we are with the current price. I must admit, I have been bullish copper for some time, but I'm starting to get a little bit nervous that we're really going to see that follow through, that we're going to see that the economies start to respond. And if those economies start to respond, we really need to see that demand for copper start to pick up. So to me, I'm still keeping a close eye, seeing whether or not copper will sustain these lifts, if not start to trade a little bit higher.
Would you mind sharing near-term targets for copper and maybe zinc also? Do you see further upside there?
Well, I think when I look at it, we've got to be very careful. Particularly in copper, I can really only see about a 3 to 5% lift in the price. I can't see it moving too much higher, given that we still see those builds. And I think zinc in itself is trading by itself to a certain extent, and I think we're reaching sort of levels there. I'll probably only see some more small marginal gains of between 1 and 2%. As I said, I really want to see the economy starting to kick. I want to see China really starting to move ahead. We did get some very positive PMI data out of China at the beginning of the week, and I really want to see that start to feed through to price action. I'm yet to see it, but I'm hoping to.
Right. Prathamesh, what's your view on copper, and how much of a role do you think copper scrap has to play in this, and the supply of copper scrap? And also, if you can share targets for both copper as well as zinc.
In terms of copper, we see all the mining issues seems to be resolved out. Now all the mines are back in track. A wage issue has been almost sorted out. So we see copper supply not being disrupted from here on. So in that case, we will have ample of inventories being built up, and that would possibly pull down copper. In the international markets, it's hovering around LME copper for 5,800, 850. We see a make or break situation in copper below 5,700. So if it goes below 5,700, major correction seems to be in the cards. And in the Indian markets, again, it's hovering around 380, 376 on the lower side and 385 on the higher side. So if it goes below 370 mark, we expect it to further go down lower towards 350 mark in terms of copper.
Right. Navneet, what would your preference from the base metals pack be? Because possibly limited upside seen on zinc, but if you can also throw some light on nickel, because some kind of greater supply is starting to emerge out of the already shut mines in Philippines. Do you see some easing for nickel in the near term?
See, talking about nickel, we've already seen prices beaten down too much compared to other metals which have performed about 40 to 100% in the last year. Nickel prices are down about 20% on an average. So in my sense, nickel prices are close to bottoms, and probably some kind of bottom fishing or some kind of averaging out activity will start to begin in nickel prices. From here on, most of the nickel producers are deep under the water, and probably continuing at such pace will be difficult. As you mentioned, Philippines mines continue to pour in more and more metals, and the mining shutdown ban, which was expected to come in force, has been put on stay, and until that is put on force, 7-8 mines which were largest producer of nickel have been back on track, and mining activity has been permitted. So these all are having an impact on the metals, particularly in the very short term. But in my sense, in the medium term, nickel prices are poised for an upside, probably by about 10 to 15% if you talk about the next couple of quarters.
All right. Aurobindo, from the base metals pack, what would your pecking order be from this point?
Well, actually, I think copper would be my preferred commodity that I think we have been understanding it better. And in the last month, copper fell by almost 5%, and looks like looking at the inventory numbers that are lined up at the exchange warehouses and bonded warehouses and the LME warehouses and SHB warehouses, I think that is what dragging copper prices to trade down. And in fact, the surplus deficit side, if we would say that, I think it is getting into a bit of surplus side of the commodity, and I think that is what is going to pull the copper prices down from here. And as we spoke here, at $5,700 as a good support for 3 months forward for LME, I think I would continue to hold that as a support level, and looks like in the shorter term perspective that level should be broken down, and probably copper prices might come down by another 5 to 6% from here. So Indian market copper price has broken below 376, 377 today, and we see copper prices coming down to 365 as well. So broad range for Indian copper prices, I would say 365 on the lower side to 385 on the higher side. So any rise that we see at the Indian futures market, one should go for shorting the contract at higher level for the short term. Yeah.
All right, gentlemen, we're going to leave it at that. But thank you so much joining us, Jonathan Barrett, as well as Navneet in the studios, Aurobindo, as well as Prathamesh, with a deep drill down of what risks lie ahead of us as far as the geopolitical strikes in the country of Syria are concerned, and also your broader view on the base metals pack. With that, it's a wrap on this edition of Commodity Bets. More news and updates continue on the other side.